Good afternoon. It's a pleasure to join you today for the presentation of the 5th annual report on ethical and value-based finance. The performance of ethical banks is truly impressive. As your report shows, they are more focused on providing services to the real economy, and they are also on average more profitable than traditional banks. Your results are proof that sustainability and profit can go hand in hand. The same spirit is very much at the heart of our economic policy. With the European Green Deal and with our Next Generation EU program, we want to show that sustainability and growth can go hand in hand, that the green transition can be the engine of a more sustainable and more inclusive economy. Delivering on the green transition will require profound changes across the board and massive investments. According to our estimates, we will need to add 520 billion in additional investments every year until the end of the decade to meet our climate goals. Public finance will continue to play a key role, but a substantial part of these mountains of investments, of course, will have to come from the private sector. Attracting private finance and channeling it towards the transition to a climate-neutral economy is therefore a key part of our mission. This is where our sustainable finance strategy comes in. In 2018, the Commission adopted its first action plan on financing sustainable growth. And last year, we adopted a new and improved sustainable finance strategy. Over the last few years, the EU has put in place the building blocks for a sustainable financial framework. Among these building blocks is a mandatory disclosure regime for both non-financial and financial companies, providing investors with all the elements to make informed and sustainable investment decisions. Disclosure requirements include the impact of a company's activities on the environment and society, as well as the business and financial risks faced by a company due to its sustainability exposures. Ethical banks were among the first to adopt guidelines on how to account for indirect emissions from their portfolios, so let me praise your pioneering efforts. Another building block is a set of investment tools, including benchmark, standards, and labels. These make it easier for financial market participants to align their investment strategies with the EU's climate and environmental goals. They provide greater transparency to market participants. Last year, the Commission adopted a legislative proposal for a standard on European green bonds. This proposal will create a high-quality voluntary standard available to all issuers to help attract sustainable investments. And the extension of the EU eco-label to financial products will provide retail investors with a credible, reliable, and widely recognized label for retail financial products. Now let me conclude with a word on the current economic outlook. We are facing a challenging winter ahead. As Russia's war continues, energy prices remain very high, and inflation reaches new records. Financing conditions are tightening both in Europe and globally. Economic sentiment is deteriorating, and a recession can no longer be ruled out. Against this backdrop, your report notes that, and I quote, member states could conceivably abandon or postpone their sustainability agenda and focus on more urgent issues. I recall that similar concerns were voiced during the pandemic. And then the Commission put forward the Next Generation EU and the Fit for 55 package. So let me assure you that even in this crisis, the Commission has no intention of putting its sustainability agenda on the back burner. On the contrary, as part of what we call Repower EU plan to reduce our reliance on Russian fossil fuels, we have set even more ambitious goals for the rollout of renewables and energy efficiency measures. So the EU will stay the course and continue to lead the way in the transition to a climate-neutral future. That is what we have consistently done over decades. We have pushed for international agreements like Kyoto or Paris. With the European Green Deal and our Fit for 55 package, we have set increasingly ambitious targets for cutting emissions emulated around the world. With Next Generation EU, we have put the green transition at the heart of our recovery from the pandemic. And with our sustainable finance strategy, we are steering capital flows towards green and sustainable investments. There is, of course, room for improvement. A lot of improvement is needed. But if we look back, I believe it's important to recognize the progress we have made. Or, as President Obama once put it, better is good because you consolidate your gains and then you move on to the next fight from a stronger position. Thank you.